Hello YouTube, this is Stephen with On My Way to Fire, a channel about early retirement and all things investing. And in today's video topic, I want to talk about taking a loss and why it hurts more emotionally and psychologically than taking a win or a stock market gain. All right, so let's get into it. So I've been investing since 2006, and I primarily started off as more of a day trader or early swing trader, not really holding for longer than a month or so. I've definitely evolved into a long-term dividend investor and a more patient and disciplined investor in that approach. And taking a loss, man, that is like the worst case scenario, and it definitely hurts. And I'm going to link to an article here from Alpha Mind Investor, and it might give you some tips, but I'm going to mainly draw on my own experience over the years. And in fact, I wouldn't say it got bad, but I lost confidence in myself in the beginning, which led to me taking a break for about 8 years between my early days of trading versus what I'm doing now, where I've been much more consistent and deliberate with my trading mindset. So if you're taking a loss, a stock or ETF has not worked out for you and it's gone down, you have a decision to make. You're going to look at that red percentage and the dollar amount unrealized loss and have to decide, do I buy more and double down on this, or do I just take the loss and walk away? Now, the benefit in a taxable brokerage account is you can take that loss and apply it to your taxes. But there is a thing called a wash sale rule. So you want to look into that, which means that if you buy that stock again within, I believe it's 30 days, it negates the loss because they don't want you taking the loss on your taxes only to buy it back cheaper. So do your own research on that part. But if it's in a Roth IRA or a rollover IRA account, you can take the loss and put it towards something else. But the mindset of pushing that button and taking the loss, that's the hardest thing to get over the first time. And I think why it hurts the most is because it's kind of like a worst case scenario in your mind that you're like, darn, I didn't really have this thought out all the way, or the market went against me and I don't know what to do. I may as well just take what I can. And that's a form of loss aversion. And I think it, based on this article, it's talking about coming back to our survival instincts and how sometimes we just have to just take the loss and be done with it. And I know for myself, for the most part, I had pretty successful small trades in my beginning days where I took small gains of 5 to 20%, but they were all short-term gains, and I had to pay a lot of taxes on those gains when it came time the next year, filing my tax return. And so in the end, was it worth it? Maybe for the experience, but overall I didn't really benefit from it all that much. And I took a lot of risk and had a upset stomach more than a number of times in between tracking these trades. Now keep in mind, back then you had to pay $10 to get in and out of a stock, so it's a $20 round trip. So you kind of had to come up with $1,000 or a couple $1,000s worth of trades in the value of the stock to make it worth it, because you're looking for that movement, and you're trying to make a couple $100. You need so many shares to make it work in your favor. So I took that experience, but in the end, like I said, it really just wasn't worth it, and I took a break for a while. And when I came back to trading, by that time in 2014, a number of the brokerage companies introduced commission-free trading on ETFs, and this meant that you could buy these funds at no trading cost, so you wouldn't pay the $10. So I primarily got in on preferred stock and international ETFs, and I had moderate success with that for the first year, but ultimately, I think it was one of these international funds. It just took a dive, and the fund went down and down and down. And I was very tight on cash at the time. My budget was extremely thin. I was, focused on paying my mortgage, paying my bills, and it put me in a scarcity mindset. And I just was not in the right place to be doing trades and investing at that time. But it was a good experience overall. It made me a better trader and better investor today. But in that time, I did not buy more of the international fund that was going down. And I want to say it took something like 9 to 10 months for that fund to come back. And I just so happened to buy right at the market top. I want to say it was about 17 bucks, and I watched it go down to about $8 or $9. And, to see $1,500 investment go down, 50% in that time was very painful and difficult time to get through. And although I got the dividend, it was very minimal, and I had to use it towards my budget to pay bills. So it wasn't the best use of funds, and effectively it was dead money during that time. But I held and I held and I held, and eventually I was able to sell and make a small profit of about 20 bucks or so on the the principal amount of the stock. And then of course I earned the dividend. So in the end, I probably earned somewhere around 6% for holding over just a year. But man, it was a painful lesson. Now I had another experience with a company called Tattooed Chef. Seemed like it was an upcoming organic food company. And it was doing well in the beginning. And I made some trades on that one, probably about 6 or 7 years ago. And I made some money. And then when it had a second dip, I went back and I started buying again. And it just went down and down and down. And ultimately, I think the company filed bankruptcy. And I just sold at a loss, recovering somewhere around 30 to 40% of the original principal price. And it definitely hurt. But overall, my trading, career, I'm probably at a success rate of like 96 or 97%. But you never forget those losses because it's like, darn, I just really made a mistake with that trade. I thought it would do well. And conversely, I've had other stocks that I bought that have done quite well and that they've either bought me out at 3 to 5 times my average price or even double or triple is still pretty great, But you kind of minimize those because you just fixate on the ones that didn't go right. And so if I use any kind of sports analogy, like a baseball player has to be successful around 30 to 35% at the plate to be considered a great hitter. A basketball player, free throw percentage might be considered great with like an 80 to 85% percentage. So to have a stock market trading percentage success win rate somewhere around 95% to 97% is pretty darn good. But we just really focus on those losses because it reminds us we're human. The market does not always react the way we think it will. And, it's just a reminder that there is risk in trading. And again, that particular one, Tattooed Chef, was a single stock. I benefited from that international fund because it had many companies in it. And so what I look for now is a little bit more specific surgical type trading. I don't dump large sums of money in the market like $2,000 to $5,000 at one time. I incrementally buy shares in batches of around $200 to $500, maybe at the most. But I take my time with the buys, and I'll just buy 2 to 5 shares at a time. I'll use limit orders and really focus on down days to capture a good purchase price and get a good cost basis going. And as the dividends come in, for the most part now on my taxable account, I prefer to set them to cash. And that allows me flexibility to buy other things that are on sale when the market dips. And when the market has a comeback, not all stocks come back at the same time. It depends on the sector, it depends on the individual company. Did they just have earnings? What's happening in the market? There's a lot of factors that go into it. So I guess my takeaway for this video is losses are a part of trading, and it's just something you have to get used to as a possibility. And you have to make a decision to whether you want to add more to that company if you still believe in it or that ETF, or if it's something you just want to cut the loss at like 5 or 10% and be done with it, because it could go down more, but it could also recover. So that's what trading is. It's risk assessment, risk management. And you have to have that stomach to see it through different market cycles if you want to come out on top. And I've had some great rewards. A perfect example of this recently was Intel. I had been buying the stock probably about 5 years ago when they still had a dividend. And I did okay with it, but I didn't really trade it. I kept buying it. And as it declined, it kept going down more and more and more. At one point, I was probably down about 40% on it. But every so often, I would buy shares between $25 and $19 over the last couple years. So I continued to add on it. And, in some respects, maybe I was lucky because it was part of this government program of the current administration where they took an interest in Intel. And I was able to successfully get out of Intel with about a 45% gain. But I had to hold it for about 4.5 years for a bulk of those shares. So it really taught me a lesson on being patient. And, sometimes you'll get lucky on the back end by not being overreactive to a negative situation. One piece that really kept me going was they got a new CEO and they had a turnaround plan. And so that gave me some faith to keep buying it even when it was down. And those shares, because I held them over a year, I was able to cash in some great long-term capital gains. And by doing that, I was able to move that money back to my checking account, put a little bit into my Roth for the year, and kind of reset myself a little bit mentally. I gave myself a cushion, and I paid down some of my home loan with that money. So, it worked out really, really great. But had I reacted at the time when it was going down, I would have sold at a significant loss. And the difference is staggering. So hopefully you'll take a look at that article share your thoughts on taking a loss and how you deal with it. For the most part now, I try to be extremely patient, and I try to make calculated risk buys when I see a stock down. But for the most part, I still have probably 2 losers that I need to unload in my account, and I'm trying to find the right mental strength to get through it to sell them. So wish me luck on that. All right, guys, I'll see you in the next video.